Hello, my friend. I know today's market is very boring. Most of you have doubts whether the correction is going to finish here or it will continue. I want to show you four different time frame of S&P 500 index. This one, it is where we are now. In 4,176, as you see it here. In the last 8 days, market fell to reach new highs. As you see it here, 1, 2, 3, 4, 5, 6, 7, and 8. There is no meaningful positive day here. All the candles are doji, and two with the body is actually negative candles. So when we have a sharp move like this from here, March 25th up to April 29, when we have something like this and end up with multiple dojis and we fail to reach the new level, it means there is no momentum in the market anymore. Usually, at the end of any move, we see multiple doji candles or candle with small bodies, and then we see a correction. At the end of any market, there is something that I want you to pay attention to, because at the end of any market, we usually have multiple gaps. Prices try to open at higher levels, but there is no enough energy to go further. So you see in all these days, price try to open, but at the end of the day, you see a long upper shadow or a long lower one, because at this point we have two different uh, group of people: those who think we should go further, and those who think that's enough and we will have a correction. When these two power become equal, the buyers and the sellers, usually we enter a trendless area. Trendless area are very important in my view, because this trendless area could broke from both sides. But what help us to monitor this is waiting and be patient to see the confirmation, whether this is upward breakup or downward breakdown. We should wait. Usually this area is very toxic for option trading, because this is where usually max pain happen. It is not a conspiracy theory. The max pain happen because price doesn't move either upward or downward. So these areas are very shaky, and usually if you enter any trade, there is little certainty. If you see it here, those who bought the options or sell the options, if they didn't close their contract in less than 24 hours, they end up with nothing. So this is very important to monitor for those who are doing option trading. Let's move forward. As you see it here, this area is pretty much similar to what I showed you in the chart before that. You see it here, multiple dojis, multiple shadows upward and downward. And this is S&P 500, February 2021. You see then we see a correction. And it is actually the very same of what we have here uh, right now. So 7% to 10% is what I expect at least in coming days. But you see here exactly the same pattern happened once again. We had a gap. It priced below, crossed below the support area here. Then we see two positive day, but failed to reach the new high, and then you see sharp drop happened again. This one is also this chart is also S&P 500. It is February 2020, just before the pandemic. So as you see, before the pandemic, very small body candles, multiple dojis, then you see a gap, and this is what happened during the pandemic. So even before the pandemic, there was enough sign in the chart without using any indicator to see it is coming. The correction is coming. Interestingly, at this time, Warren Buffett was sitting on $128 billion cash, which was the highest level of cash in Berkshire history. So as you see it here, we had a very sharp move from October 2019 up to here. Very same experience we have right now after March 2020. And you see it end up with small candles, then gap. And you see, because of the major news at that day, we don't see any pullback or retracement, and then it continues all the way down to um, to 30-35% correction or market crash, since it was happening very fast and it was more than 20%. We can call it market crash. Now let's move back to see if we can find something else like this or not. Okay, this is also S&P 500. As you see it here in September 2018, before as you see, we had a like 5 months upward trend, then ended up with multiple dojis, and you see what happened next. Market crashed. After that, to as you see it. So this pattern is repeated so much in the market in the last 2 years after any 5 months or 6 months or 1 year sharp trend. So we can rely on this. At least we should be very careful. As you see it here, I showed you one before the pandemic and one before that, even before that. So uh, this is a what I call a reliable repeating pattern. Any reliable repeating pattern worth to pay attention to. So whenever you see a sharp rise in the price, in the stocks, in index, or any commodities, then it end up with multiple dojis. Be careful, because this is the time that reversal is very, very near, because there is no enough energy to push the price further. V-shape V-shape corrections are different. I will try to cover that as well. But this pattern, it helps me to pinpoint usually the market tops, and I can show you multiple stocks. I did the same You can see neo analysis, NIO, or you can see my Tesla analysis. Usually when something like this happen, we should be very careful. I know S&P 500 did not experience such a bullish move or parabola movement like NIO or Tesla, but at the very same time, uh, it makes the same pattern, and you see that even even small news like what Yellen said yesterday could push the market 2% low. So this is very important. Pay attention to that, and I believe this market, there is at this time there is no momentum unless we see a new high. If we see a new high with higher volumes, this is what I say. For example, stocks should be traded more and more. But if you check, for example, Apple stocks, if you see Apple from here, you see that uh, the volume and the value, uh, as you see it here, the volume and the value decreased heavily. For example, look at this part of the movement from March to September 2020. As you see it here, the volume was higher and the value of trading, for example, in September, the average weekly was near $24 billion a day, and the daily trade value was around 26. But now the average, as you see it here, decreased to less than $10 billion a day, and today it is $7 billion, one fourth. Look at this. So at this time, people will not pay you. Actually, the price is lower in comparison to this. So as you see, today's price is much lower than September 20th, when the price was the highest daily was 137. And as you see, at that day, people willing to buy Apple by 27 billion a day, but today it is almost 7.3 billion. So this is where there is no money, there will be no bullish move. So I want you, and what is very very important is the May 4th. You see the trade volume increased more than the average weekly, but the price goes down. It means sellers are very, very strong, but buyers are not that strong. I want you to listen to this and make good decisions. Currently, the best strategy would be stay aside of the market, having tight stop loss, decrease our exposure. Please answer your question. I will try to cover it. Thank you so much.